So over the past few days, we have seen weakness in the global markets, right? The US as well as the Singapore market, they have sold off by more than 1%, more than a few hundred points for the Dow Jones as well. And what happens is the Fed have came out and hiked rates by another 0.75%. So this is pretty much in line with expectations since last month because people have been talking about it. And inflation unfortunately still remains high. It's not really come down as much as what most people or even the Fed wanted. All right, and the Fed have no choice but to hike rates. And the thing is that besides just hiking rate, they have mentioned that by the end of the year, in terms of the peak, they have penciled in another like 1.25% rate hike by the end of the year. So that's like a further increase. They're a bit more aggressive again, is where the market started to sell down even more. All right, so what is the market right now outlook? I mean, as we head into the last quarter of 2022 and even into 2023. All right, in this video right here, we look at the indices, right? The Dow Jones, the S&P 500, the Nasdaq very quickly, and even the STI, the Singapore market. Let's take a look at some of the levels that have set in over the past few weeks based on prices selling down. What are some of the key support levels that you want to take note of? What is the trend? Is it looking a little bit weaker? Where are some levels whereby you can think about bargain hunting again, or maybe you should wait? This will be covered in this very video. So we do a quick market outlook. We'll dive into the charts for each of the different markets: Dow Jones, S&P 500, Nasdaq, and the STI. So I hope after watching this video, you get a clearer picture of what to do, where we are right now, and what are some of the key levels that you want to take note of. Let's go. So this is Dow Jones trading at about 30,076, right? So pretty much back to where we were in like June. You can see June, you're right over here, 30,000. Kind of rebounded, came back down in July, started to see quite a firm rally all the way to 33,000 plus. We could not really hold above the support, and it reversed back down with the short-term moving average coming down as well. So pretty much back to where we were, that very firm support that I talked about as well in my previous video, the 30,000 psychological level. Look at this right here. I mean, just about last year, you can see we were pretty much holding above this 30,000. So this is a psychological level, anything to do with like 10,000, 30,000. These are what we call psychological level. In fact, that we kind of like rebounded here as well in June, in July. So to see a bit of rally, we are right over here, back here. So I think it remains quite crucial over the next few days, or maybe next 1 or 2 weeks, if we can really stay above this 30,000 level. I think this level is crucial, right? If we were to break down this level firmly, right, if we go like 29,800, 700 or 900, and we go below 30,000, and we stay below 30,000, then it could be a bit weaker in the short term. We may actually see more selling coming back, right? Why? Look at this. As I mentioned, you want to take a look at this green line. So this green line is the 20 days moving average. You can see as we head towards this bottom here in June and July, this green line started, it was like pointing down. I mean, like since March, April, just moving down, flat down, and flattened and started to point up, right, with prices going above this moving average line. So that was a pretty good strong rally for like a month plus, for July all the way to mid of August, and then we kind of went below this green line, is still pointing down. So this green 20 days moving average, right now you can see that it's still pointing down. So unfortunately still a little bit more bearish, all right, for now, bearish for now in the short term, all right, as we're still below this green line. And if we break this 30,000, it can be still a bit more bearish, or you might still see more short-term downside. So what can happen is that we can hopefully see some good support coming back just above 30,000. Maybe you have to just stabilize a bit, go back down below 30, and then climb back up again, and buyers or maybe the entire market start to see a bit of footing here, a bit of a support base coming in around 30,000 as it rebounds. And this green line, let me just draw it for you. This green line, same thing, right? This is the 20 days moving average. You can see that if this green line starts to like point down and down and down and flattens out again, and we see a bit of support at 30,000, and it starts to reverse back up again, all these can point to strength, right? Just like what we have seen over here somewhere in June and July, where we saw that rally. So that's what we're going to see. I mean, if you want to see some bullish reversal actions coming back, that's what you can look for as well. Right, so I think that this 30,000 is quite key, right? If if we're to break below, as I mentioned, this green line still continue to point down, prices below it, then we may still see weakness in the short term. And where could be the next downside target? I think it would be the next one would be maybe around 29,000. Let me just draw it for you. I think 29,000 would be a slight support. You can see was originally the resistance somewhere in 2020, right? You can see it came down. Right over here, let me just draw it for you. You can see right here, right? So we kind of like sold off. We sold off, and you can see when we broke 29 and 30, eventually the rally started. So 29,000 could be a little bit of support, but if that gives way, I think pretty much we will be back to this more firmer support right over here. I think this is quite clearly a support level where we rebounded a couple of times in 2020 as well, about 3 to 4 times around the 26,500 level. I think 26,500 level is the key level whereby we might start to see some bargain hunting coming back in if we were to actually go below 29,000 first. Alright, so let's see. Over the next few days, it's critical, or it's critical that we stay above, above that 30,000 if we really want to see some good reversal actions coming back again. Alright, so this is the S&P 500 index for those of you who are trading the SPY, the S&P 500 ETF as well. Alright, we're seeing a bit of weakness right now. It's trading about 3,757 points. Right? So you can see that previously, same thing somewhere around like June, we kind of like hit a bit of a bottom, and that level was somewhere around that 3,630, right? 3,630. So I think just to give it a bit of leeway, maybe about 3,600. I think that is a pretty good support level. Look at this right here. So we got like nearly rebounded. You can see right here, there was originally the resistance level somewhere in 2020. Of course, when we broke up, the rally really started all the way up, and now this 3,600 will be a key support level that we want to hold above, right, for the market to really see some good support coming back, right? So this is right now about 3,757. We might start to see a bit of weakness still. Obviously, you can see that's where it kind of like broke that 3,008 as well. All right, so we might see a bit of weakness. Hopefully, as I say, right, we're going to see some good, bargain hunting coming back, right? Just like what we saw over here, right, in June, whereby I started to see some good reversal candles, some green candles coming back. And yeah, we do see that, and there could be a chance of a rebound, right? But if we do break that 3,600, then you want to be careful. We might see more weakness, right? And the next support level, just let me draw it for you. I think could be right over here, maybe around that 3,200, based on what we're seeing in 2020. That is pretty much the next support, right? Level after the 3,600, right? So this is the S&P 500 in the short term, right? In the short term, unfortunately, we can still see some weakness, all right? And because this 20 days green line is still pointing down, right? Still pointing down, prices below it. All right, of course, look at this right here. When we broke below that 4,002, 4150 support, you can see that's where the trend started to reverse down in the short term as well. Okay, so here's the Nasdaq trading about 11,066. So you can see it looks quite similar to the Dow Jones, the S&P 500. All of them have kind of like rebounded from the low in June, July, went up, and then somewhere around like August we peaked, and now we are making our way down. So most of them are kind of like heading towards the low. There was a support. I think Dow Jones, we are pretty much back at where the 30,000 is, but for Nasdaq and the S&P 500, we can see that we are kind of like making our way back down to that low, or that critical support, right? So what is that support for the Nasdaq? You can see that this is the level 10,500 level. We kind of rebounded in June, and right here I think I mentioned as well, this was in 2020, a couple of rebounds from it. You can see we neared it, rebounded. It was originally the resistance level as well. It turned support, and you can see that we are pretty much making our way back down here against 11,066. So we can slowly head there to like 10,500, and hopefully, right, hopefully we see what we see over here, a couple of good bullish candles coming back, some bargain hunting coming back for the entire market after selling down for like about 2 weeks. If that can happen, if we can hold above 10,500, then that could be a good thing of some bargain hunting, or maybe potentially getting in to catch the dips, to catch a rebound. So you want to let this stabilize. You want to let it stabilize for a couple of weeks, or maybe 1 or 2, maybe 1 week or 2 weeks, maybe at least, right, to let it stabilize, to see if this support really can hold if you're looking to catch the dip. Because if you can break this support level, then unfortunately we might still see weakness, right, and we can potentially hit to the next support level, maybe around the 10,000. I think 10,000 would kind of be like the next psychological support level to watch if we break the 10,500. Alright, so short term wise, you can see it still looks a little bit weaker, something like the S&P 500 index. This green line, this 20 days moving average, you can see it was like more pointing up, somewhere around August last month. We flattened and sloped down, prices gone below it, and the short-term weakness actually started to happen right here. So right now you can see it's still a bit weak, coming down. But let's see if some good support can come back around the 10,500, right? So this is the Nasdaq composites. Okay guys, so if you like this video, go ahead to give me a like as well. That will definitely help out the channel, and thank you so much for doing this, right? So let's take a look at the Singapore market, the STI Straits Times Index right here, trading about 3,000 229. Right? So you can see that the STI, right, looks a little bit different from the three US indices, the Dow Jones, S&P 500 and the Nasdaq. You can see we are actually holding quite well for the entire Singapore market. We have formed a really good support. They've been holding since 2021, even though the market sold off in April, May, June. All right, we found some support, but we have not really find like a new low, or like we can't like break certain support level that's been holding over the past 1-2 years. That has not really happened. Right? We are holding quite well, and I talk about this support level as you know over the past few months as well. That would be the 3050, right? 3050. In fact, 3000 would be a good support level, but let me just raise it up to about 3050. It seems like a couple of times we touched this level. Let me just show it to you right here. Rebounded. You can see we kind of like neared it, rebounded again. All right, and we are kind of like consolidating at a higher phase right now. And what would be that phase? Right here, I think the resistance, right, is quite clearly, you can see this is the resistance right now, about 3,300 level. That is a key level for the STI, whereby we are facing a bit of selling pressure. We cannot really get past that level over the past like 4 months. You can see it was originally the resistance. We broke up, support, we kind of broke down, we sold off. You can see right now we are kind of like still below this support turn resistance. So 3003 is the level for the STI. I think that's where, as it approaches, we are starting to see some selling in the blue chips in the market as well. All right, and of course, over the past 1 to 2 weeks, with the US selling down, you can see we have kind of like pushed away or rejected this 3,300 level again. So kind of like you can see right here, consolidated up and down for about 1 month. We broke this 3,150, swing up, swing down, swing up, and now we may be heading our way back towards the 3,002 or maybe 3,150. I think that could be kind of like the range that we might trade at right away here, right, from 3,150 to about 3,003. I think that is pretty much a range over the next few weeks, next few months in fact as well. That could be what is happening right now. So I think 3,150 is the support level that you want to watch. Why? Because yeah, it was originally the resistance level that I talk about right here. We broke up, now it's support, and also previously it was the support level as well, somewhere in 2022, in January, in March as well. You can see it touched and rebounded. So that is pretty much the range. So let me just draw it for you. I think that is the range right now, 3,150 to 3,003. As long as we stay in this range, and of course, if the STI can really break that 3,003, then we may actually see more strength, right, from 3,003 all the way to like 3,450. And that would be like the previous high we have seen, as it touched about 2 times in February, in March, and then we came back down. That could be the next upside, but let's not talk about that now. I think right now we definitely want to get past that 3,300 resistance level. So yes guys, we have covered the US market and even the STI, the Singapore market as well. So I hope you have a kind of like clearer picture of what are some of the key levels that you want to take note of in terms of the support that I talk about. Right? So I think that the support levels are quite key. We are pretty much heading towards a support level due to weakness in the markets, due to this whole entire rate hike news coming back, inflation not really coming down as much as most people want it to, and we are still seeing selling. That's a fact, right? That's where the market is still selling down. So we could still see weakness in the short term, but as I say, we definitely want to see some stability, some good support, some buying pressure coming back. We might see a technical rebound from those support levels that I talk about, but it remains to be seen, right? So if you want to like bargain hard, catch some of the dips or some good blue chips, it's good to see some stability for the market around those levels first, right? Because if you were to like just break down and sellers to come back, and then the Fed comes out and then say that they want to hike rates even more, right? Instead of like the peak by another 1.25% peak, they mentioned they want to maybe have a 2% or 3% peak. That could kind of like scare the markets, and that's where it would actually affect the market even more. The market can sell down more based on the rate hikes expectations. Alright, so just take note of that level. So I take note of those support levels I talk about. Alright, and I hope that you find this video useful as well. Alright, so thank you so much for watching. Joey here. Let me know in the comments below what's your biggest takeaway, and look forward to answer to each and every comment. Thank you so much for watching. Take care.